Bitcoin is getting choppy again, and this time the volatility is not random. Behind the price swings, we're seeing a powerful mix of ETF outflows, shifting whale behavior, and a fragile technical structure that could determine Bitcoin's next major move. In this video, we're going to break down what's really happening under the hood and what smart money is watching right now. But quick disclaimer before we begin, this video is for educational purposes only and is not financial advice. Always do your own research before making any investment decisions. Let's dive in. Bitcoin recently pulled back from its highs and is now trading in a volatile range roughly between the low $60,000 and the low $70,000. What's important here is not just the price drop, but the change in market behavior. We've shifted from strong trending momentum to a high uncertainty consolidation phase. Historically, these periods often precede either a continuation breakout or a deeper corrective move. So the key question is, which one is more likely this time? To answer that, we need to look at the flows. One of the biggest drivers of Bitcoin's rally over the past year has been spot Bitcoin ETFs. But recently, we've seen something important. ETF flows have cooled and, in some periods, turned negative. Why this matters? Institutional ETF flows act like liquidity, gravity for Bitcoin. When ETFs see strong inflows, price trends smoothly, volatility compresses, and dips get bought quickly. But when flows slow or reverse, liquidity thins, volatility expands, and price becomes more headline sensitive. Right now, the data suggests institutional momentum is pausing, not fully reversing, but that pause alone is enough to create the choppy conditions we're seeing. This is the first major volatility driver, but the second one might be even more important: whales. And that brings us to the technical picture. On-chain data shows mixed but very telling signals. What we're seeing, some long-term holders are still accumulating on dips, but short-term large wallets have increased transfers to exchanges during recent rallies. Exchange reserves have stopped falling as aggressively as before. What does this mean in plain English? Smart money is no longer in full accumulation mode. Instead, we are seeing tactical profit-taking, range trading behavior, and more two-way liquidity. This is classic mid-cycle behavior. Not necessarily bearish, but definitely more volatile. Until Bitcoin clears that upper zone, the market remains in range-bound uncertainty. On the daily time frame, momentum has weakened, price is struggling around the mid-range, and volatility bands are widening. This tells us the market is undecided. Here are the levels traders are watching closely. Immediate support around $66,000, major psychological support at $60,000, and a breakdown risk zone below $60,000 that opens the door to deeper volatility. The $60,000 level is especially critical because it aligns with prior consolidation, heavy volume nodes, and strong psychological interest. If that level breaks decisively, volatility could expand quickly. On the upside, first resistance sits at around $68,000, with a major resistance zone between $72,000 and $73,000. The bullish continuation trigger would be a sustained break above $73,000. The most likely short-term scenario, continued choppy range between roughly $60,000 and $72,000, while the market waits for the next macro catalyst. Several macro forces are amplifying volatility. First, interest rate uncertainty. Higher for longer rate expectations tend to pressure risk assets, including crypto. Second, dollar strength. A stronger dollar historically creates headwinds for Bitcoin in the short term. Third, risk sentiment swings. We are seeing periodic rotations into safe havens like treasuries and gold, which reduces marginal liquidity for crypto. The key takeaway, Bitcoin right now is being driven by macro liquidity conditions as much as crypto-specific factors. So where does Bitcoin go next? Based on current data, three scenarios are on the table. The bullish scenario, if Bitcoin reclaims and holds above the $72,000 to $73,000 zone, momentum could quickly return and target the mid-70,000s and beyond. Bottom line, Bitcoin's volatility right now is being driven by a perfect storm of cooling ETF flows, more neutral whale positioning, and a fragile technical structure. This is not necessarily the end of the bull cycle, but it is clearly a transition phase that traders should respect. As always, this video is for educational purposes only and not financial advice. Crypto markets are highly volatile, and you should always do your own research and manage your risk carefully. If you found this breakdown helpful, don't forget to like and subscribe for more deep dive finance analysis, and I'll see you in the next one.